take the next problem. This is problem number 14 in page number 2.469, and this is of course this is a essay type question, little big problem. You are given with the informations of Mr. Swami Prasad for the previous year of 2023-24. You are given with a dividend income amount of 1 from the horse race, interim dividend, dividend declared, amount received in February 2024 in connection with winning from lottery. Various informations are given. Let us go with one by one. The first one is interest on deposits with the firm. See, you know very well, of the incomes given in the question, we are classifying those incomes under the heading of general income and specific income. Okay, specific income in the sense the dividend income, etc., are coming under specific income. Here, interest on deposit with the firm, that is a 5,600. This is interest on deposits. Any amount of deposit interest is taxable under the head of income from other sources. Then another one is amount of income under the received from a non-agricultural land. That is also, it is a taxable under the head of general income, that is in the chapter called income from other sources. Then these general incomes, that is what we have taken, interest on deposit and non-agricultural land income, both the items are taxable under section 56(1). Then another one is specific income, that is dividend income, etc., are coming under specific income, dividend income and casual income. Okay, you know very well what is a casual income. So these two things are taxable under the heading of 56(2) under section 56(2). The first one is dividend income from a tea company. This is 2,500 is the amount of dividend received. Then the next one is interim dividend. It is not received for the year 23-24, but that is not for the year 23-24. Dividend warrants were dispatched in May 2024. That is May in the sense, you know very well, our assessment year ends on March 31st. Okay. So for the previous year 23-24 ends on 31st March 2024. Any amount of income received for the period of 1st April 23 to 31st March 24 is taxable under this year of 24-25. Okay, for the assessment of 24-25. And this one, this is the amount payment, dividend warrants were dispatched in May 24. So this is the amount received after the 31st of March. So we have to take that amount for this period. Okay. Then another one is cooperative dividend. That is also taxable. Before that, you please mind it, any amount of the dividend received is taxable. Point number 1. Dividend from foreign company or Indian company, both the things are taxable. Okay. So interim dividend, it is not taxable since the amount of information is given, not received for the period of 23-24, so it is not taken here. Then another one is a declared dividend from P company, 4,000 rupees. It is taxable, and that amount of 4,000 is taken for this period of 24-25 assessment year. So we have to take that 4,000 taxable. Then cooperative dividend of 450 rupees, dividend received from a cooperative society, is taxable. Okay, so these all the dividend income. Then another one is casual income. Casual income in the sense horse race, bettings, card games, winnings from lottery ticket. These things are casual income. Here we have to see one important point. If it is amount of income received or the prices received. Then if it is net income, we should grossing up the casual income. In this case, we are given with the raise income, where it is, yes, it is given as, it is given as that the amount of casual income is race winnings. It is given as race winnings. So we are taking that 6,500. Straight away it is considered that amount of race winning, that itself is a gross income. We are taking straight away 6,500. Then another one is winning from lottery ticket. It is given as 3,500. That amount of 3,500 is considered as the net income. It is given as net income. If it is a net income, then we should take it as we should grossing up the amount of net income. Okay, so since it is a net income, we have to consider, we have to grossing up the income. Okay, so 3,500, all 35,000. Already I told you what is the tax rate for casual income, 30%. So 35,000 into 100 divided by 70. So that comes to 50,000. What is the concept lying in this? The amount of TDS is 30%. The value given in this, the amount given in this is net income. We have to grossing up. So what the amount of tax deducted? 30%. So how will you grossing up 35,000 into full value, that comes to 100 divided by tax deducted balance is 70. So 100 by 70, that gives you the full value of 50,000. Now we have to take certain amount of deductions given in the question. We have to take that. Okay. So what are they? Number one, collection charges. That the interest collection charges 100. Bank interest is taxable. Then commission, bank commission is taxable. That the collection charges of 100, that is eligible for deduction. So we have to take it as deduction. Point number 2, interest on loan. Okay, 4,000 is the total amount into 20% is the rate given. So we have to take that 20% on 4,000, that comes to 800 rupees. Okay, that comes to 800 rupees. What is that 20%? Maximum amount of eligible deduction for the interest income is 20%. So that we are calculating. It is to up to a maximum amount of 20%. The dividend income in respect of a dividend. That 80,000 interest on loan allowed up to 20%. That we are taking. Then point number 2, collection charges for the lottery ticket. It is not eligible, so no collection charges for the lottery. Okay, lottery income you are having, collection charges it is not given, so it is not eligible. Then next one is purchase of lottery ticket. That is also not eligible. Okay, specifically you are not given with what is the amount for the purchase of a lottery ticket, so we cannot claim that. Total deduction, that comes to 100 plus 800, 900 rupees. The amount of gross income, that comes to 70,550 minus deduction. Balance is income from other sources, that is the taxable income from other sources. In this way, you will have to calculate. So, two new important things you come to know in this problem. Number one, how to grossing up the casual income. Point number 1. Point number 2, in case of dividend received, dividend declared but not received before 31st of March, received after 31st of March, where we have to take and when it is taxable, that we should know. Point number 3 is declared dividend, how to treat that. Dividend from cooperative society, how that should be treated. Okay, these are the important aspects in this.